training right now. He's going to be off that here in about 15 minutes and then join us. He's going to talk about market makers, how options prices are set, how we can see what the value of those options prices are on a chart, and how we can then trade them. He's in May, I think he was undefeated, crushed it with his strategy. So he'll walk us through all of that today. But that's just a little sneak peek of some cool stuff you can do with AI. And so obviously, we've done some of that here. I've built scanners for you guys live, just kind of winging it, showing you guys how it's done. But I definitely recommend download the ChatGPT app and just use it for funny. I don't even know if funny is right. We're just everyday things that you wonder, like how to get crayons out of the table or if the spider was poisonous or not.
So here's a question. So my brother-in-law Steve, who is, not like a real, how do I say this nicely? He's not like a real uh, writer kind of guy. Like he's not the kind of guy that you would expect to like make sweet notes for his wife. He's blue collar, good guy, a little rough around the edges when it comes to like saying sweet things and going out of his way for birthdays and all of that. But on Mother's Day, he had ChatGPT write a poem for my sister. He's my brother-in-law, so for his wife, which is my sister. And for Mother's Day, he had ChatGPT write this poem, and then he wrote it after and gave it to her. And in his mind, it was like so good. The poem was so good and well done that he thought she would look at it and after like one sentence realize, okay, very funny. You obviously didn't write this. But instead, she was like started crying and was like, "This is the most beautiful thing."
Oh my gosh.
And so then you have a moral dilemma. Like he thought she would just know right away. So like the question is, then do you tell her after she's like, blown away? This is the sweetest thing you've ever done for me. Then do you tell her like, oh, actually, that was ChatGPT, and I thought you would know that, or do you just kind of, ride with it? But he went with the go ahead and confess that ChatGPT was the better husband that day and not him. It's just so funny. Like you talk about regular day to day things. I think it is replacing like a whole swath of regular life, tasks, thoughts, and some people I think have really leaned into it in a way where basically they think of any task and they think before I start working on this, I should ask myself the question, can AI do this instead? And when you get in that habit, which I'm not sure if that's a healthy habit or not, but it's amazing how many things you end up like being like, actually, probably there's a way that I could get AI to do this for me instead.
Dude, well, first off, in the moral dilemma, I don't think so. I think I like to think of it as just a helper. It's like a calculator. And there's nothing wrong with using the calculator if you're doing some math. That your friend put in the effort to get the poem done. Love it.
Yeah. Um, yeah, that's good. My kids started playing the Pokemon Nintendo game, which is
Oh, which
dude,
one?
it's the one that's supposed to be like the ones from the 90s when I was a kid, like very nostalgic. What's it called? Shining Star or whatever. It's like the old school, like basically works just like the ones from the 90s when I like, had a Game Boy in the third grade. So it's like very nostalgic. I'm like watching them play. I'm like, this is ridiculous how much it is like that. So I also had ChatGPT write an epic story, infusing my kids' names into the Pokemon story with their characters and stuff. They absolutely loved it.
That's hilarious.
Yeah, the cards and games have made a huge resurgence.
Oh, it's crazy. I I also didn't realize that like Nintendo games were still like $50. I thought they were like, $10 nowadays because, no, people don't play Nintendo anymore, but
Oh
apparently
no,
not.
they're big.
You know what people do is they get like I think it's called a ROM or something, and you can like play it on different systems and stuff like that.
Hmm.
Yeah. It's and they even will code like the Nintendo 64 games, and you could play like the old Game Boy games on them. I watched a YouTube video.
Oh, that's crazy.
Yeah. The N64 is super expensive.
I heard I wish I would have saved mine. Apparently it's like some of the old 007 games and stuff are,
Yeah.
like big big collector's items now.
Wow.
Yeah. And then if you get them graded, if they're in good condition, um, they're worth a lot
Dude,
more.
Lance, have you seen the what's his name? Golden Auctions?
Yeah.
Yeah,
Ken Gold
Ken
Gold.
Goldman. That is
Yeah.
that is like my dream.
You
That's
know,
maybe one thing I'd do over the trading stocks.
he used to be on the Home Shopping Network. So like when you went like this was probably 15, 20 years ago. So let's say you wanted to go buy like some baseball cards on the Home Shopping Network late at night. He was the guy who would call in and be like, Don, this is a gotta get in now. You're
That's
getting the
hilarious.
Ken Griffey rookie card, the
That's
Frank
awesome.
Thomas. That was him.
That's hilarious.
And now he's got some big auction house.
Yeah. All right. Well, diving into the markets, quick overview here. Mostly flat over the weekend. Gold's popping a bit. Again, let me just pull it up on a chart just so you can see what that even means. I mean, that's the gold ETF. I'll show you the futures here as well. Oh, there goes my thinkorswim. Pull back. Gold popping close to all-time highs, not quite there yet. We're looking at the futures here. We're looking at about almost $3,400 an ounce again. We peaked out here about 35.50. So interesting to see what will happen there. Now, what's interesting this time around, and Nate, I don't know what your take is, but Bitcoin's going the other way, which I know we just came off all-time highs. A lot of excitement. We bought it around 82 here in the opening playbook, rode it all the way up. Currently riding it down slightly right now,
Oh yeah,
but
it's punch me in the face real quick. Let me share my screen real quick, and
yeah, go for it.
I'll just mention I'm still being pretty aggressive on Bitcoin because I think it has more in the tank. But if you see my screen right now I actually have the automated options indicator on it, which is really simple. It's just letting me know if a weekly close is at all time or not all time, but is at above the previous week's highest point, below its lowest point, or somewhere in between. Yellow is in between, red is below, green is above. And so for me, on the weekly chart, that red vertical background is basically what I'm waiting for. I'm going to be out on Bitcoin if we get one, and we're actually pretty close. Like if this week were to go much lower, I'd be out and just wait. I'm not going to sell my regular Bitcoin, but my options positions and all of that, I'd be out and back to the sideline. The question is, I think, are we going to get one of these where we made a new high and then we surged and it looked like we were going to scream and make another leg, and we just didn't and just totally failed and actually collapsed deeper? Or are we going to get something more like this where we got a delayed high and it squeezed? I think we have a pretty optimistic forward look here because I think the markets are still going to try to make a squeeze toward all-time highs. I don't see a world where Bitcoin doesn't try to lead. But it's interesting. On the flip side, Bitcoin has done a pretty good job of forecasting weak markets. Like if you see here, this was January of 2025. It was ahead of the curve in terms of being in this big downside flush. If you go back here, kind of same thing here in June. We got the flush before we got the later flush in the stock market. If you go all the way back here, this red candle is November. So this is, 6 weeks before the actual 2022 market sold off. Bitcoin kind of led the charge there. So if nothing else, I still think Bitcoin acts as kind of a pre-risk off, risk on indicator, even though it has tracked with gold a little bit better lately. And if you want a really simple way to know what I'm doing, just watch for this low to be taken out here on a weekly candle. That'll put me on the sidelines for at least the kind of medium term, right around 109 or rather 102 $500 on the weekly chart. So I mentioned that's kind of what I'm waiting for, just from a technical standpoint. I think Bitcoin is a momentum asset above all else, and so those are the lines I'm watching. You're muted, Graham.
Perfect. Perfect. Now I'm back. Economic news this week. Nothing new. Well, thanks for that analysis on Bitcoin. That's what I was saying there on the mute. But we'll cover this all tomorrow. We do this show every day, 10 and tomorrow's my full market in-depth outlook for the week. Earnings this week a little bit quieter. I do like CrowdStrike. It's been a great stock. We have AVGO on Thursday, and my beloved Lululemon, who has just, been in torch land for the last couple of years. Showed some signs of life there for a little bit, but then obviously tariffs kind of took it out of the picture. But we'll see what they have to say Thursday. Now, I do have a question for you guys on Friday. We were talking about weekend options with Nate, which was undefeated at the time, 5 for 5. Nate, I believe, Did you hit your target yet?
We hit our target, yeah, which is nice actually because the market's now down 0.5%. So got that little pop first thing in the morning. That was all we needed. I don't know if anyone in the chat was in on weekend options. That $1.79 target got filled. I don't know what that was. 9:38. I guess I could check right here and see. What
Post in
time
the
did we
chat
get
if you
filled?
guys took the trade.
9:34 we got filled at that on that weekend option trade, which was nice. It was the one that moved a little bit quicker on Friday, so I actually ended up chasing it and getting filled a couple pennies higher than when I first sent it out because it was moving quite a bit in the last hour of the day. But for those of you who got in anywhere like in the 150s or low 160s, hit the target today at 9:34.
That is awesome. Well, hopefully we have
I saw
some
a couple
people
people said they got
in the
filled,
fifth.
Bar and Faith, and a couple other people. A couple people said, it was moving fast on Friday, which I had the same thing. I ended up chasing it a bit.
I mean, markets were crazy on Friday.
The Sherry got filled. That is one of the things about trading end of day, which I think Lance is going to talk about actually getting in at the beginning of the day, which has been a lot easier lately than getting in at the end of the day because the last hour of the market has been wild.
Yeah,
Yeah, the I mean, we're seeing like like on Friday. Let me see if I can pull this up here. I
yep,
mean,
I'll give you the screen.
this is just getting absolutely insane. Let me show you guys. Let me pull it up here. We're seeing this intraday. Like, it's so hard to trade directional right now. Let me see if I can grab the screen. Um, let's see. I might have it blocked here. Can someone post in the chat so I could grab the screen? Just so the chat box pops up.
Is it saying host needs to give you?
Ah, here we go.
Oh.
I got it now. Yeah, look at this right here. This is exactly what I'm talking about. I mean, it's thankfully worked in our favor, but like if you look like here on Friday at 12 o'clock, 12:15, the market went from 50 points.
Yep.
We dropped in 30 minutes. Even here at 9:45, market dropped. The market maker move today was about 25 points, as you can see right here.
Mm-hmm.
And we moved 25 points in 15 minutes. And then
Yeah.
we moved another 25 points in 15 minutes. So you're basically having the market, and this is something we really noticed in this 4 p.m. payout strategy. The market where we open is where we close.
It's been a ton lately. I mean, we've got so many of those whiplash outside of the standard DV. Like if you're one of those direct, which I can't trade like this, but if you are one of those people who like watch the VWAP on the 15-minute chart or something like that, you'll see it like get way
Yeah.
overextended and then snap back, way overextended the other direction, snap back.
All right. Like even, we could go to, if you look, especially at the month of May, so you always got to adapt to the market. So here's where we open, here's where we close. I mean, we're talking 10 points,
Mhm.
Yep.
right? Here, Tuesday, because we had the tariff news, we squeezed and it was nonstop. I mean, you don't see any red candles. One,
Yeah.
two, that's it. And this is a 15-minute chart. Here, same thing. Barely, what is it, a 20-point move? If you remember back in April, or even before April, we were moving like 100 points a day. And now we are just randomly getting, like here,
Yep.
another huge dump. This was like 100 points.
That's crazy, yeah.
But if you look like at previous days, I mean, we were just opening, same level, opening, same level. So if you're trading directional, um, it's it's been very, very, look, I mean, look at this. It's just no move. So it's been fantastic for selling premium. That's what we call, uh, selling options. It's been fantastic. But trying to buy options, like, so doing a debit has been horrendous trying to make money. And like you guys talked about with the Bitcoin, I mean, I don't touch Bitcoin, but like, look at it. I mean, you have this whole level, oh, everything looks great, and then we're just trading right back to where we were. Look at last Monday.
Hmm.
So it's like, how are you supposed to trade directional? Like, are you really going to hold through this huge downdraft and sell at the tippity top? I mean, if you're perfect. But, again, it's such a tight range that you have, again, just a random dump where it could be very difficult. So I definitely just been doing what we call selling vol or selling premium with the 4 p.m. payout. And, it doesn't matter too much about direction, thankfully.
Yeah,
Lance, did you guys have a perfect record in May?
Yep.
I
Nice.
I know we will talk about this in a minute, but
I
is
know.
that is
That's
the
a
idea
jinx.
that we're getting these big moves but ending up not actually netting any direction even better for you? Because they have to price in that volatility when you're getting 15 minutes that move 1%, even if net we're actually not getting, you know, a ton of
Right.
move by the end of the day. Like they still have to price in that volatility.
Yeah. So ideally, we would see higher vol. So ideally, we should be seeing like 40, 50 point intraday moves.
Mm-hmm.
But, and that's what we were doing back in February, March with all the tariff, you know, news and everything. But now with the VIX under 20, the VIX is not moving. So the market maker move on SPX or the market, when I say SPX, XXP, SPY, I mean, just mean the overall stock market. The VIX measures the price of SPX options. So for every about 10 points in the VIX, you're going to have, give or take, about 13 to 15 points in SPX options. So if you have a VIX 20, you can be expecting just shy of a 30-point implied move every day. With the VIX being, what are we, 1938 right now, we're waking up to maybe a 30-point move, but we're moving 30 points in 15 minutes.
Right.
So it is, in my opinion, very uh, it's not pricing in the correct move of SPX because we do have these days where we just have this 50-point move, which it shouldn't be happening. Um,
Mm.
but we're just having like random tweets, tariff news out of the blue, stuff like that. It's making it difficult because you have to, you either have to be on the right side of that big move if we get one, or the days that we don't get one, I mean, it's super, super, it's a cakewalk. It's very, very easy. You don't have to stress about anything. But it makes directional trading hard because, like, let's say you buy Nvidia and it looks great, and then the next day it's down, what do I do? Or the next day it's up 2%, and you're like, what do I do? It's if you're trying to trade directional, because like I have directional positions and they ain't doing nothing.
Yeah,
Like,
I mean, I've tried. I know Graham is kind of the same way. I tried to, even on the directional ones, lower the scope of required movement.
mhm.
Like I took that Apple one. I don't know if anyone took that Apple trade with me. That was right after the court judgment. Was that Wednesday? And it was like, a 197.50, 200 spread. And I was like, oh, I'm safe. I'm 2.5 bucks. I'm 1% in the money here. Well, the market opened. I was 2% underwater on the trade. Then at noon, I was totally comfortable in the trade again. Then at 3 p.m., I was totally underwater. And then at 4 p.m., it closed like 20 cents above 200 bucks and, ended up as a full profit. And I think Graham had a similar one on Meta. It's just like the market, the craziness is there where you're not getting sustained direction. So you almost have to be more defensive and protective in nature and give the
Yeah.
market that room.
Yeah, it's if you're not selling vol, it's very hard to trade, but the issue is with selling vol right now is you're not getting any vol to sell. So you're not getting that big enough credit
Mm-hmm.
that you should be getting. Like you should be getting a lot more money to do these kind of trades, and we're not. So that's with this low VIX, it's made it difficult. We really need like a black swan event to where the VIX pops to like 30, 40 again, and we have a reset. The only issue is there's too much complacency. I mean, there's nothing that's going to shock the markets now. That's why we're seeing what
I,
we're doing.
Well, we shouldn't say nothing.
well, but
Well,
honestly, they are shaking it off. It's
right.
crazy
I
now.
mean, like there's no news that is going to tank the markets right now. And that's the sad part is so you want news that can move the market. So if you're trading puts, you make money. If you're trading calls, you want a stock to have a greater than expected move. Like a name like Etsy today, it's up 7% out of the blue. That's huge, right? You're going to make a fortune buying calls on that. But it's only happened in a couple stocks that you see. Like look at Lulu right there. Or Avgo, the options are already, but like look at Lulu, you can't
Nowhere.
make money on that.
Yeah.
You know, so unless you're making the right side of earnings, right, and you get a move, that's really it. So that's why I've really just focused on selling premium with the 4 p.m. payout plan, and then really just trading earnings, doing them pretty small. Like I did a 4 lot of NVIDIA calls and made like 30%. CRVW, I did a 2 lot of calls, and thankfully got lucky on that one because it moved up a lot. But like the other issue is if you don't sell at the open, that's difficult too. Like pull up CRVW and look at it from the NVIDIA earnings day.
Yeah.
It had a nice pop, and then look the next 2 days. Or I think that was it, that big red candle.
This
Yeah.
one.
Yeah.
Yeah, we hit
Popped
like
up
130,
130.
and then we closed at what, like 105?
Yeah.
Mhm.
Like what?
Well,
It's huge.
I mean, pull up Nvidia, same kind of thing. Not as extreme on the downside, but took a huge chunk of that move away
Right.
in the next
All
two
of it.
days. And
Okay. So if you bought calls and you didn't like do weeklies and get out at the open, I mean, you can't make money on the video calls. Really, the whole half, what, 2 weeks of May, there's no money to be made.
Now, just to clarify for everyone in the chat, when we're saying debits and credits, Lance, I think you're specifically when you say debit talking about buying calls with our spreads that we do. The debit spreads, they're similar to what Lance does with the credits, except for he's collecting that premium up front, getting paid a little bit more on that quick decay
Yep.
as well. And it's funny you said, and we had a question here in the chat, and I would like for you to cover it again too. But you said SPX based on the volatility should make about a 30-point move, and that's exactly what we saw today, about a 30-point move in the SPX before it bounced back. Can you walk through how you were able to get that number again one more time?
Yeah, right now we're already at a 20. It's already, here's a good example. If we look at it here, so now we were about 30 points at the open.
Mhm.
Now we're only at 21 points. So if you look, that's about a 0.36% move. What's made it extremely difficult today is, so you would expect only a 21-point move right now, and we still have, it's only 10:30. We moved from open to here. So from the high to the low in the first 45 minutes today, we moved about 50 points. So that is double,
yeah,
more than double what was expected. And then from here to here, we've moved 30 points. So we're moving 50, 30 points in 15, 30 minutes, but the market makers are only expecting a 21-point move. So that tells me two things. They're going to kill the market and it's going to do this for the rest of the day, do nothing. And then if you're buying options, like you guys were talking, buying debit spreads, buying call spreads, that's what's going to happen is volatility is going to come out those spreads. So you're going to lose money unless the stock has a pretty aggressive move. All I'm doing with this is I'm giving myself a pretty high range. So we can go higher all the way to 5, 9, 10. That's the one I just sold right now. And then the 5, 9, 15 bear call spread. So sell a call spread. So I make money. I make basically 20% as long as we close above 5, 9, 10. If we go down here, 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 I make money too. So that's all I'm aiming for pretty
you
much.
said above 59.10. You mean below 59.10?
Yeah, but if we get below 59.10, so anything here or lower, I'm basically making 20%. And that's all I did all last month was I gave myself a big enough range. Like here, even though Friday, we went, so technically slightly bearish when you sell a call spread. We went down a lot and then we went up a lot. It doesn't matter because I'm giving myself such a high range
Mm.
to where I can be wrong on direction and still have the potential to make money. And that's what you want to do,
And
right?
then
Because you're not going to call the dead low and buy and then sell the dead hot top. Like that's just fake news, right? That's not going to happen ever.
and you're using, correct me if I'm wrong, the market maker's range to select your entry.
Yeah, like I'll show you guys right now. So like right now, the range is 5, 9, 15, 5, 9, 20. right? It just moved because it adapts to the current price of SPX. So if I want to go to SPX, I could go the 5.915, 5.920, and I can get maybe $1.15. Let's try. Phil, $1.25.
Oh, nice.
So
Wow.
like, you know, that is just huge. So I can go all the way to 5.915 and get $1.25. So I can make almost 25% as long as we close below here.
Give that one again. That was 59.15, 59.20.
Yeah. I mean, that's huge.
Oh yeah, I can get quite a bit on that.
Right. So let me post that actually one more time.
I think I can get $1.30 maybe. Let's
Your
see.
screen got real tight there for us, at least for me.
I mean, you said the volatility is not as high, and I know what you mean. Like the VIX is now below 20, but that's quite a bit of premium for that much cushion. I got $1.30. I mean, what's that going to be? A
You got a
30%
dollar
ROI
20?
in 5 hours? That's pretty good.
It's funny. I was just reading yesterday. Obviously, Wall Street, the market makers are doing this every single day, selling options to normal retail traders like us. They had even in the volatility of March and April, where the markets crashed, the banks saw record profits, 33% increase in profits year over
Hmm.
year from trading
I
profits.
wonder, I wonder how. I wonder how they got those profits.
Doing the same sort of thing. Yep.
Well, yeah, it could be what they're doing is when volatility happens in markets, it creates so much. So volatility is so good because it makes option prices more expensive. So you're going to have record demand in option trading because you need not only spectators, but the dealers. So that everyone's selling the options, it goes up because volatility, more people get scared. So more people are going to hedge. Most people when you see in the options market, especially in SPX and indexes and ETFs like SPY, QQQ, most of those people are using options as a hedging instrument because most people are long stocks, right? So if you're JP Morgan and stuff, you own stocks, right? You don't short stocks, you own it. So what you have to do is go to the options market for insurance. Insurance demand goes up. Just like, let's say there's a hurricane hitting Florida, you're going to check your insurance and make sure your insurance is good and everything like that, right? So that's what happens when volatility happens. So therefore, the banks, the institutions are going to make a killing when
Mhm.
that happens. It's like the best thing ever for them is um is having this volatility. So all we want to do is take the same side as them because they're right a majority of the time. And that's, what we're doing.
That's great. Can you walk us through real quick? I know that your indicator you have on the chart here sometimes says to do a bearish play or bullish play. And again, you were perfect in May, so it's obviously doing something right. How is it able to kind of figure that out, whether you're going to be selling the bearish options or the bullish ones?
Yeah, so I'm not monitoring the whole time at all. So in fact I don't even look at them throughout the day.
Okay.
That is the best strategy. So the best strategy is do not look. I mean, honestly, do not look at the market.
Dude, especially with these markets.
Right. So like do not look. I don't even turn on CNBC, nothing. Go out to lunch most of the day. So all we're doing is we're taking a calculation of the VIX. Let me pull it up here.
Is this screen really small for you, Nate?
There we go. I should be fixing it here.
Okay,
There you
fine.
go.
There you go.
Good.
So all I'm doing is taking a calculation of the spot VIX on a 15-minute chart. And if the VIX closes higher than the opening price at 10 a.m., we will sell a bear call spread. If the VIX closes lower at 10 a.m., we're selling a bull put credit spread. So like here, VIX closed higher, we sell a bear call spread. Here, higher, sell a bear call spread. Here, lower, sell a bull put credit spread.
Hmm.
So that's what the indicator gauge is going off. If it's going off the spot price of the VIX to create these signals where it says sell a call spread, sell a bull put credit 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 spread, sell a bear call spread. So we technically don't need the market to move in our direction. We just need it to stay within the market maker implied move. That's it.
So you got the directional bias and then the extra cushion on top. Basically, you're layering those two things.
Right. So we're aiming for a big enough cushion that ideally, if the market goes against us, it can go against us just not that much to where it's exceeding the market maker's move. So basically everything is in align with the market maker move. And it works for individual stocks too. Like for example, let's say I wanted to trade Nvidia this week, right? Nvidia is up a little over 1% today. The market makers are only expecting Nvidia to move about $2 or 1.5% all week. 1.45, let's just say 1.5%. Now, why is that? Well, Nvidia just had earnings, so volatility is, going to be low in it. And if you look at Nvidia, it's only up not even 1.5% today. So they're basically saying Nvidia is going to keep within this range for the rest of the week. If we look at like a more of a volatile stock, someone want to give me a volatile stock in the chat? Maybe Carvana, right? Maybe something, or maybe something. What name do we have with earnings upcoming?
We've got AVGO on Thursday.
Okay, so let's look at that one. That's a good one. So like AVGO, look at this.
Oh wow, look at that.
So here, the high end of the range is 265. Low end is 234. The market makers are expecting a 15 and a half point move. So that's 15 and a half bucks. So 250 plus 15, give or take, is going to be what, 265? So that's our high end of the range, or about a little over 6% implied move. So it's calculating that the market makers, if we look at the 265 calls for this week on NVIDIA, they're probably going to be, I'm going to say, a little over $2. Shall we take a look? Or AVGO, pardon me. So that was the 265 calls. Wow, they're 365. So I would
Holy smokes.
So I would say these AVGO options are rich because you're basically needing 265 plus 365. So you're needing a $2.68, basically and a half percent move just to make money on AVGO calls. That's your break even. So then you would have to do a history of, does AVGO move outside the market maker's move? If it does, then maybe you could buy options. If it doesn't, sell options. But if you look at the history of, let's say, NVIDIA reported earnings recently, that one didn't move really. But AVGO, why is the implied move so high? Well, look what happened here, right? It went
Yeah.
from 180 to what, 225. So you had, what is that, a 45-point move? I mean, and the stock was a lot cheaper. So really, that's not that big of a move, right? Because AVGO can have what we call greater than expected market makers move because it's happened before. So the market makers are obviously going to price and hedge for a big move. And then you have what we call here, we might have a blow off top to where these shorts have to buy cover where we can explode. I mean, maybe we go to 300. And if we go to 300, then those 265 calls at 365 go to $45 and you make over 10x your money. So is it worth a shot at earnings? You know, you risk one to potentially make 10. I mean, sure, right? So that's the way you have to look at it when you're trading, is the risk versus the reward. Or let's say they miss earnings or stay flat, you lose $365 a contract, no harm, no foul.
Well, I mean, in a nutshell, though, I think that's what I like about volatility, particularly, whether you do it with like a defensive debit spread or you do it the credit up front. I mean, either way, is the idea that on something like earnings, the market makers do have to price in that volatility. They can't, even
Right.
if the consensus is, hey, it'll probably underperform the top or the lower end, they can't set a range too tight because if it blows off, they're going to take an absolute beating. So their hand is forced to give that range on something like earnings, even if 8 out of 10 times the stock is going to underperform. They still have to prepare for that 2 out of 10 times. And I think the SPX basically what you're kind of doing is zoning on and doing that on a daily basis where you're trying to take those ranges, give it cushion, knowing that at a vast majority of the time it will underperform. And we'll get in. We have a whole bunch of questions on how you're doing that, how you're setting the range, how much you're collecting. We'll get into that in just a second. Before we do, let's stick to earnings for just a minute here. Are there any names you actually like, or are you sticking more on the, looking for premium even on the earnings side? What are your thoughts? I know you're kind of
Oh
the
no, I love
resident
earnings.
expert.
What do y'all have in the what do y'all have in the chat? I know besides AVGO, what else do we have?
Someone mentioned Palantir. I don't know. Palantir, I think already had it,
Oh,
right?
they already reported. Yeah, they
Yeah.
already reported.
Anyone else have earnings for this week?
CrowdStrike tomorrow after the close. We got Dollar General at the open tomorrow.
Oh, we actually saw some flow in these names. Look at this. So we actually saw the sneaky bastard. Uh, Look at this in CrowdStrike. No, and when I say
Wow.
sneaky, I mean it. This hit Friday. Was it Friday in
Yeah.
May?
Yep. May
Yeah.
30th, Friday.
And I mean, it's not the biggest bet. It's only 140,000, so it's not big for a big stock like CrowdStrike. But you have to figure this one still has a lot of built up shorts because remember CrowdStrike had that outage.
Crash.
Hmm.
Yeah. So these stocks, and what we're seeing is a lot of these. I don't want to call it a crappy company because it's not. I mean, it's at 52-week high, but a lot of these companies with shorts in them the shorts have been getting squeezed, just because usually in a market where there's so much, uh, people are so pessimistic that they want to short stock. So when you do have good news or even mediocre news, the stock will rally. So we did see some 505 calls in CrowdStrike. I mean, I gotta imagine the implied move is probably insane, but let's pull it up. It's probably like 40 bucks, 30 bucks.
30.
Yeah, 30. Why it's here, move that down. But yeah, 30 bucks. I mean, that's pretty high.
Yeah.
But the 500 calls, again, if you're trading earnings, don't go all in. But I do want to give you all some action because wow, the 500 calls are 685. Wow,
Ooh.
that's super pricey. What else was it? Dollar General?
Yeah, and someone said Neo has earnings too. Is that right?
Neo? It probably
Kind of,
won't.
kind of.
DG? Did they just buy some? Was it this or Dollar? It was. This was the sneaky guy. Pardon me. This was 5 minutes left in the day. A June 97 call buyer. And what is a dollar? What is so these are at the money calls. What does Dollar General have too? You have a massive gap. Look at this. 125 to 85 it went. See, so I would be playing Dollar General and look for a gap fill, right? A gap fill would be, let's say we go 115, 125. That might be a little outrageous.
Yeah, so that's a 20% move, 25%
Right.
move.
Yeah, that's insane, but let's see how much the 105 calls. Because if we go over 105, we're
Hmm.
going to be in a gap. So it could be la la land. Obviously, you can make your own case about tariffs and dollar stores, but again, none of that matters. I mean, that's all the media wants you to believe when they make money by selling, commercials on drug companies. So like you go to Dollar General, buy the 105 calls for a buck 60. That's super cheap, right? Let's say the stock goes to 110, those go from a buck 60 to $5. If it goes to 110, or it goes to 115, you almost 10x your money. So, I mean, I like a lot of these earning plays, especially with gap fills. And if the stock crashes, it goes down to 89, you lose your initial premium, whoop-de-doo. But I think it's a lot better doing stuff like that right now than saying, hey, I'm going to pick a call option on Google or Amazon and hope it goes up. Because what if you bought calls on Google Friday, right? And now it's down 2%, and you're SOL. Or you bought, Amazon calls on the breakout or on, these green days, and then it does nothing. So I would rather do something like that and just look for stocks that can move over the greater than expected market maker move. And then, are you going to have like a 90% accuracy? Heck no. But when you're right, you're going to 3, 4, 5x your money and you're going to be like, holy crap, like this is insane. So I would do stuff like that right now and not try to worry about getting a high batting average and not trying to be right on picking the next direction in Tesla or Nvidia. or Bitcoin, because I'm in some Mara calls and down money, I would just focus on, hey, how can I spend a little bit of money to maximize the biggest return? And I think that's earnings right now. What do y'all think?
Well,
Yeah,
I mean, I think definitely on some of those little, like you said, those ones that have a little bit tighter expected move that you can try to get outside. Um, for me, like trading, earnings with a 10% expected move and hoping for a 25% squeeze, I, I can't get excited about that.
But that's why though they're expected, that 10% move, right?
Oh, I know. I just can't commit to doing it.
Yeah.
I
So like
think
SM has a good list. So if you look, SM posted in the chat, DocuSign, Dollar Tree, Lulu, HPE. So the first three, let's cut out HPE. DocuSign, insane mover.
Hmm.
Dollar Tree, insane mover. Lululemon, Graham, you like that one, right? Or no?
Graham's a big
I'm a
Lulu
big
guy.
shopper. I'm a big consumer.
Huge, huge, right? Expected huge potential squeeze because what did Lulu just have? And if you look up the short interest, what's the short interest on these stocks?
Docu's a 10% expected move. What's Lulu?
Huge. Oh, wow. Lulu had calls on Thursday,
Look at
616,000.
Yeah, and if you look at Lulu in December, what does that move?
Look at this.
50, 60
$27.
bucks on Lulu earnings.
Oh
Holy
my
crap.
goodness.
Lulu had on
Oh, that's a
Thursday,
big one.
that's a huge bet. So, I mean, I'm taking these. Shoot.
Dude, holy smokes. The last two earnings on Lulu, one was 340, peaked out at 420, $90 move, and then down on the downside the next one.
I mean, how do I
Oh
not?
my goodness.
I gotta take these calls. How much are they? 12 bucks?
You-
Jesus.
That's a
Uh,
big one. That's a big bet.
I know. Wow, that is expensive. What if I do like the 350 calls?
And guys, if you've
Do
been
the
coming to the sessions, you know that Nate and I like to do. We like to get
No,
part
no,
of the
don't
way through the
say.
market maker move, do a little out of the money debit spread. You get like 200%. You don't need near the move. And
No,
you don't have to
God.
pay
Dude, you're
1,000
buying
bucks.
those $12 calls? You're a maniac.
No, I bought the 340s.
Oh, okay.
I can go to the 327 and 330 spread. It's
Dude, yeah, I'm
a dollar, and the profit potential is 150%.
Lance is gonna dunk on us, but I'm gonna say I love the debit spread. Give me the 317.50, 320, or go up to the 325s, make 150%. What did you
Now,
do? 325, Graham? What'd you do?
I'm doing 327.5 and 330 right
Oh,
now.
you're going big then. You're gonna go for like
Well, it's not even half the implied market maker move. So is it
yeah,
really
150%.
150%? Yeah. Debbie's got a good question. What about tariffs impact on Lulu? My opinion, Debbie,
Oh,
that is already
see, none of
priced
that
in.
matters.
Right.
That's what the media wants you to believe. So like that is exactly what the media is selling you because that's the what's selling on cable news? Tariffs, right? That's like the big thing, tariff, tariff, tariff. None of that matters. The whole tariff news, the whole cost impact, the fundamentals, that does not matter one bit when it comes to earnings. When you're playing earnings, you're playing what is everyone doing? So everyone's probably saying tariffs are going to have an impact. So everyone's going to either short Lulu or avoid it, right? So therefore, what's the max pain is to the upside, right? Even if numbers are bad, they might say, yeah, we're, doing good or buyback, and then the stock goes up 10%. So don't think about what everyone else is thinking or what the media has told you, because you're going to lose money doing that, right? If everyone else jumped off a bridge, would you jump off a bridge? No, right? So that's the story that they want you to think. And that is the incorrect way when it comes to financial markets. That's the incorrect way of thinking is, oh no, that tariff news or that AI model is not good because that's your opinion and opinions don't make money, right? That's why economic professors and economists are always, poor because if they knew how to take a risk and they knew market dynamics, they would be hedge fund managers, right? They wouldn't be economists getting a, $100,000 paycheck from some university. The short float's 5.5%. It's not horrible, but it's something. And another thing with Lulu is they've had a lot of negative media coverage for that, what, like fat shaming or the hoochie mamas dancing and stuff in the store. So that's another thing that can only drive. I feel like a permeable on this show with you guys.
I was gonna say Lance is like optimistic on everything. Forget tariffs, forget
I do
everything. We're
think
squeezing up, but I'm kind of in the same boat to be honest.
this whole earnings season has been, like you said, the Max Payne trade where we've
Right.
actually had an upside opportunity instead of
Like,
2023, 2024, everything was peaking out every single week. And it's like, the Max Payne's to the downside. But now with how the market's pulled back and corrected in March, April, everyone freaked out. Now it's to the upside now.
right. And like Abercrombie is a good example. They cut guidance, missed earnings top and bottom, horrible warning outlook, and the stock rallied 25%. And now it's right back to where it was. But again, when you're trading earnings, you're doing binary events. That's when I say it doesn't matter. The only thing that matters is how are funds positioned? If they're positioned short, they're going to get squeezed. If they're positioned long, the stock's going to come down. And it's not because maybe a stock doesn't have bad earnings. It just might be that like Palantir had incredible earnings, right?
Hmm.
Everything was great. The stock went down for a couple of days. Then it went back up. But when you're trading options, it doesn't matter because you just need the quickest expected move because volatility and time decay are going to get crushed, right?
Yeah.
So even if you bought the 125 calls and you sold them at 134 this morning, you still lost money, even though the stock's up $9.
I mean, how
Because
about Nvidia? Four beats in a row going nowhere.
right. That's exactly it. So like Nvidia might have the best earnings in the world. I think they did, right? The
Oh
earnings
yeah,
were
they killed four in a
fantastic.
row.
But the stock went, I mean, it went up for like 30 minutes and it went down. So the reason why is because everyone was looking at Nvidia earnings. If you want to try to make money on individual stocks right now, two things. Avoid it and trade SPX, sell vol or sell premium, that the 4 p.m. payout plan strategy, or find little stocks that can make greater than expected market maker moves, like this TEM. They just had that short seller come after it right here. And now look at it, stock's up 12% today.
Yeah.
Or find individual stocks that can move regardless of what the NASDAQ or the Dow is doing. So
Yeah.
you're really, some more AVGO calls, speaking of, you're really having to be selective and picking correct spots. And it's why, like, I haven't put on a trade in Tesla last week. Um, Even though it looked like a clean breakout, we've done pretty much nothing. So this is a stock I would say very difficult to time, right? Rather than some crazy little oil stock or some earnings or this, Tim. I don't know what Tim is. I think it's AI Nancy Pelosi stock. You know, that stock can move because it
Hmm.
doesn't care what the market's doing.
Yeah. Well, so basically, two big takeaways: sell premium, take advantage of the fact that we're getting some heck like this without moving anywhere, or
Yep.
pick the stocks that are going to actually defy that exact situation where the market's ending up going nowhere. Because Apple and Nvidia and Google are probably not going to diverge from the market and make 8% moves. But,
No,
these
no,
little
no.
random stocks you can make a move. And yes, we're getting a ton of questions, guys. We are going to cover the whole 4 p.m. strategy in like 2 seconds here. As a matter of fact, we normally don't have anyone on a Monday.
Right.
We asked Lance to come on because they finished up May, had a 100% win rate, and guys, I've been doing this for a decade plus now and seen a lot of things. I will honestly say the feedback on 4 p.m. I mean, Graham, you see those channels as well. Probably the most consistent, best feedback we've ever seen on like anything ever. Just like dozens and dozens and dozens a day of people saying locked in profit, cash out the end of the day, perfect win rate, all that kind of stuff. So we wanted to kind of celebrate Lance a little bit here after wrapping up a perfect May. By the way, guys, we do this every day. Me and Graham, opening playbook is every day at 10 a.m. If you guys are not on the list, make sure you're on our text list just so you get the reminders to pop in here every day because we still have a whole bunch of people who see it and show up and then don't realize that, they should be here every day logging in. So I posted that link in the chat. Just throw your number in there and make sure you're on our list so that you're not, missing any of these sessions because we, give a lot of free trades away, do a lot of trainings, get into the meat and potatoes. We have guests on. We do a lot of good stuff. So make sure you're on that list. But
And
Graham, anything else? I do want to get on to talking about the strategy itself, since that's what obviously all the questions are about right now. Okay, how do we do it? How do you get the move? How do you set up the trade? I mean, that's what everything's about at this point. So I want to get on to
yeah,
that as soon as we can.
two more things and I'm done. First off, if you guys enjoyed having Lance on today, getting that insight on the market maker move, seeing on the chart, just depending on what the day is or the VIX is at, how wide that could be and how you can make money on that, give us a yes in the chat. I know it was insightful for me. I thought it was so cool, Lance, how you're using that VIX to pick your direction for the day. Very, very cool. And it's not like anything that I've ever really seen before. So yeah, lots of yeses in the chat. Secondarily, I know we had a question here about do you ever get worried about being exercised? But Lance, I believe the way you're trading it, you don't actually have to worry about that at all, right?
Right. So there's no exercise risk, and that's the beauty of it. So when you trade SPX and XXP, they're indexes, so they are not tied to any specific stock. So there's no early assignment like with SPY or an individual stock. There's no exercise risk. There's no, oh my God, I got 100 shares of the stock in my portfolio. They're cash settled. And what that means is at 4 p.m., whether the trade's in the money, out the money, in between, it doesn't matter. It will automatically close default at 4 p.m. every day.
That's
So
great.
it's perfect. You'll put it this way, you'll never trade the SPY ever again because you won't need to. You won't have to take that risk. And there's a tax advantages for
Mhm.
trading the index, unlike a regular stock or a SPY or an ETF. You're getting taxed at a higher rate than SPX, and that's why professional traders and institutions, really people from all over the world, the SPX is the king of the crop when it comes to when people say the stock market, they mean the S&P. The SPX is the options on the S&P.
Yeah.
So that it is kind of the creme de la creme of trading, and that's why we do it. And then so we've already traded a million contracts, just shy of a million contracts with SPX. And then all XXP is just the baby SPX. It's 1/10 the size of SPX. So you're still getting all the great benefits of SPX, but you can do it obviously with a smaller account. And there's dollar wide strikes, so they give you a little bit more wiggle room than having to go use the SPX. And you can start with, literally like $100 with XXP.
Awesome. Well, for everyone here, I know we've got a lot of people who are asking how do we get the 4 p.m. payouts. If you guys are interested in learning more about the strategy and how you can take each and every trade maybe in this month of June, you missed May. It was perfect in May, but we got a new month now, so a fresh start here for you guys. Go ahead and
Right.
post a yes in the chat. And guys, pull that up and let's go through the training here.
Well, too, and if you guys, I opened up the chat for a minute here, which we try to keep it closed just so it's not distracting. But if you guys want to hit that, everyone, I am curious because we got a whole bunch of people we weren't able to post everyone. If you guys have taken any of the 4 p.m. payout trades with Lance, whether you had all of May, you had a perfect May, or just a couple, would you mind posting? I'm just curious because we have a ton. This is one of our biggest rooms we've ever had. I'm just curious how many people are already in here. If you hit that everyone button in the chat so that other people can see it, it'll actually. I'm seeing a whole bunch of people, but so far they're not coming to everyone, so maybe it's not open. I thought it was open there, but maybe it's not. There we go. We got some people posting, but it looks like most of them are not going to everyone. I was just curious how many people are already making money because this is, like I said, probably the coolest like feedback I've ever seen. Just with Lance, I don't know how many emails you're getting a day at this point. I know it's a lot,
Hundreds.
uh, but probably like the most consistent. Just here's my brokerage account up another $300, up another $800, up another $1,200, over and over and over again. Oh, cool. Thanks. Okay, so I'm starting to see some people come in. A whole bunch of you are still posting just to the host and panelists. You have to change the to button to everyone for everyone else to see it, but a whole bunch of you guys are. So, Lance, if you want to pull it up, we can start sharing so we can get into the. Like I said, we don't usually have guests on Mondays, but we wanted to pull Lance in just to celebrate that perfect May. And that thing that Lance just covered on the SPX is pretty cool because what most people will tell you if they want to go after premium is, hey, yeah, I'd love to collect premium every day. I just don't want the risk. I don't want to be assigned. I don't want to not being a pay attention, then get assigned shares, or have all this open-ended risk. Well, what we're going to talk about today is not only just a cool strategy, not only just a perfect track record in May and everything else like that, but we've also got the ability to go for income every single day without ever having to worry about that exercise risk, which is, a pretty big deal. So, I think that's kind of a cool thing here as well. Oh, wow. Samantha up 10K for May. That's a heck of a May. Samantha, awesome. So, all right, guys. Well, let's jump in. Like I said, we already gone an hour. We were going to try to jump in a little bit quicker, but we had some extra questions. Wanted to chat some earnings. Got a couple free trades. So let's go ahead and jump into the meat and potatoes here. For those of you who are asking about the 4 p.m. payouts and how it actually